Hello, friends. Welcome to Nirmal. I am Piyush Jain, and today we are going to bring you another corporate conversation in our series of conversations with corporates. Today, we are bringing to you a household name, a name which we have been associated with, which we know since decades, since ages, since again almost our school ages, and we'll also again try and understand how the sort of new curriculum framework is actually impacting them, and also what changes are coming into sector. Let me now welcome the management, Mr. Saurabh Mittal, the Chief Financial Officer of S. Chand Group. Hi, Saurabh. Welcome to the show.
Yeah, hi. Thank you.
So, Saurabh, as I said, S. Chand again is something which I think we all remember since our childhood, and for ages again, we actually have been seeing the name here. So the brand is so well recognized across India. Now, what is very interesting, I think our viewers should try and understand more about it, that the new curriculum framework which the government is bringing, that seems to be creating sort of new revenue drivers and new growth drivers for the sector. So help us understand how this actually is changing things for you, where we are right now, because there are some classes which are getting implemented and more are coming on the way. So help us understand about it.
Yeah, so thank you for the question. So, this whole process has started with the announcement of the new education policy in 2020, which has been awaited for a long period of time. And since the NEP 2020, a lot of changes are coming not only in the school business but also in the higher education. Uh, Having said that, even in the test prep segment, there's the NTA that has come in and the CUET has been announced. So there are a lot of changes that are coming into education in terms of across the board. Specific to our business, of course, the K to 8 business is very strong for us. And in that, the NCF for the foundation stage has been announced in October 2022. Uh, while it's very premature to say what will happen in terms of numbers at the moment, because it's just kindergarten to class 2 at the moment. And while we've launched a few series here and there, but I think we'll see the full sense of it in 23-24. We should be hearing for the balance classes 3 to 8 during this year, in this calendar year, and the full launch for the next academic year for all the books in the K to 8 segment. So that will be a complete shift in terms of the kind of books that will go out to schools. The last NCF was revised in 2005, so it's been almost a good 18, 19 years. And so it will mark a change in the way people are being taught. And our understanding of the whole process is that the it's not what is to be taught to the students, it's how it's going to be taught to the students that's going to change. So it'll be more interactive, it'll be more experiential. So those kind of changes are going to come in, and it's very exciting for all of us, because the way students are going to be taught going forward is going to be a shift. But having said that, again, implementation is going to be a challenge, because these things take time to implement. So we'll see a implementation over 3 to 4 years. Some schools may adopt it immediately. Some may take longer to adopt, because again, training of teachers onto new curriculum is not something which is very easy, and that will take 2 3 years to implement. Last time also they did it in alternative years between 2005 and 2007. uh, of course, with technology, the implementation can be slightly faster with all of online trainings and stuff. But still, having said that, I think adoption of the NCF will take time, especially considering the fact that we've had 2 years of COVID where academically students did take a back seat. So things will be implemented, but it will take time. And we are hoping it will take two,
Right.
3 years time, because that is the way it should be implemented, not hurried into implementation.
Sure. So, having said that, let's go slightly granular to make it more simpler for our viewers. So, for example, K2 again to the second class, as you were just saying again, from that aspect, what is sort of market size for it? Like I would assume it's about 15-20% of your overall revenue. So, what happens in the market if the framework changes? Obviously, everybody needs to buy sort of new books as per the new framework. So then what happens? It is the schools which actually you have tie-ups with the schools, and this is how sort of books get sold, or you have to compete with other publishers? Like how actually it is happening for you in your part of the market?
So, in terms of the books that come out based on the new framework, what happens is that everyone is free to come out with their own products in that segment. You go and you showcase your product to school. The school will is free to adopt anybody's products. I mean, I don't think it's anybody's tied to anybody as such. But again, uh, there is a brand, there is a previous history, reputation on quality content, which does make a difference. And we will see the implementation. I also everybody will adopt is also not practical on the ground. There are schools who will continue to do work as per the previous for some period of time and then adopt. As I said, the implementation will take slightly longer period of time, even for any segment. So some schools may adopt it earlier, some schools may take time. But having said that, a lot of the NEP things which did come in the NEP have already been adopted by some of the schools. So a lot of things are already there in the books which are now coming in the NCF. So it's not that. So it's not a complete change that is going to happen. It's going to be a transition.
Okay. Uh, if possible, like I'm just trying to ask the number. Any idea about the sort of market share would be commanding in this segment right now, which has been implemented till second class, if possible?
Not on the exact segment as such, but our overall market share in the CBSE ICSE segment is about 13-14%, and for the
Okay.
West Bengal State Board, we are at about 35 to 40%. Again, since there are no exact estimates on the market because it's a very unorganized market, these are the best guesstimates that we have.
Fair
Uh,
enough.
yeah.
Fair enough. And also, with respect to the sort of market size, usually in 2005, when you saw the change, the big change which happened at that time, so does the entire sort of segment revenue comes into play over 2 years, 3 years? Like whatever the market size, it shifts to the new curriculum. So everybody buys new books. So that entire sort of revenue churn happens over that 2, 3 year time period.
Two things around that. One is, of course, there is a shift in market share to people who are quick to come out with new products. You get a first movers advantage. So definitely there is market share gain that happens. Second advantage, of course, is that there are a lot of second-hand books that go around, which we estimate is around 30% of the market share, especially in
Okay.
the smaller cities where they don't change the book list every 2-3 years. There, of course, that move, there's one shift that happens for a couple of years, and that will, of course, add to volumes for that 2-3 years period.
Okay. Fair enough. And sort of. When to expect the sort of next change, which is like the class three and to the higher classes? Are you expecting that over the next 1 year or 2 years, government would be actually inclined to make those changes, especially when the next year is an election year?
Yeah, so considering that they've already announced K to 2, it's only obvious that they should come out with it within this calendar year because next year is election. So I don't see it pushing, and the work is going on. As per our understanding, work is going around. It's taken slightly longer to align it to global standards. So I think we should wait for that period of time. But our sense is during this calendar year, it should come around.
Okay, fair enough. And as a Chan, before we go to the next question, as a Chan, what is sort of a revenue opportunity you're looking from this entire curriculum framework shift?
Difficult to estimate, to be honest, but the past says that it's been good double-digit growth in the 2-3 years after the change in the curriculum. And even if you look at the state board schools, when there is a curriculum change that where it happens very frequently, there it's a big change. So if you look at the regional players like Navneet and even Chaya for us, whenever there's been a curriculum change, the volume changes have been quite large. So yeah, high double-digit growth in the teens, and so that should happen.
Okay, so like we can get somewhere around 100 crore sort of revenue opportunity over multiple years.
Possible, yeah.
Yeah. Okay, now let's move to the sort of business. A lot of things have been happening. We have seen paper prices have been on fire. So, as a raw material, how it is playing out for you? Third quarter again, the prices are going up. Fourth quarter, the prices have gone up. You also have taken some price hikes. But what is your own observation on how the prices are right now? Also, sort of consumers like you usually have an idea that whether the paper prices have gone too much higher and how the sort of market shortage is. So please give us your observation.
So, I mean, it's been difficult to predict paper prices because it's more a function of global events like the Ukraine war, plus the way the dollar has been going, plus raw material shortages, and the way China has done things around the production of newsprint. So, a lot of global issues have definitely come in the last year and a half. Plus, of course, the plastic ban that has happened in India. So paper, the production capacity is limited in India, and it takes slightly longer to rebuild that capacity. So that has shot up paper prices, and with post-COVID demand being higher, of course, it has had an impact. Just for comparison, year-on-year prices have gone up from approximately Q4 to Q4 about 30% for us, and
Okay.
versus Q3, it's actually down 5 to 6%.
Oh,
Uh,
okay.
Yes, so that's because we've been able to import, and we've been able to get. I mean, the prices slightly did go down around January, mid Feb, so we made some procurement around that. Uh, and I think we are fairly covered as far as our product prices are concerned. Uh, at the beginning of the year, seeing the paper prices, we were a bit apprehensive on the gross margins, but having seen what has happened up to Q3, we are confident that there will be no impact on gross margins. In fact, with the volumes being slightly higher, slightly definitely higher, we are seeing a good. We should see some margin expansion also happen.
Very nice. In fact, the inventory days again, basically that performance in third quarter was stellar. A lot of improvement there. So obviously, again, you are managing very tightly your requirements. From the Q4 perspective, this is a very interesting time because you're procuring, you're managing your cost, and then the question comes in. We go to the first quarter. So in preparation for any sort of raw material price increase, do you make sort of advanced contracts with your raw material suppliers that Q1, Q2 prices are being contracted, or usually it is spot purchases?
So till 18 months back, we had fixed price contracts, but unfortunately, uh, that's gone away for some time because again, even the paper manufacturers do not have too much visibility on raw material prices and the global uh, currency and stuff. So that has become a challenge. And however, we are procuring for Q1 already. We already placed our orders for Q1, and in terms of inventory, we're not very heavy on inventory at the moment in terms of raw material. And even on finished goods, we've been very selective. And considering that the NCF is coming around, our inventory is well in control.
Yes, again, this is the third quarter result that you have shown that. So that's something I think the market is also liked. But if the raw material prices have been under control in the fourth quarter, did you feel the need of increasing prices further for your finished products,
No,
for the
so I mean,
goods?
our product prices are increased only once during a year. If you
Okay.
uh, the way the industry works is that your catalog gets ready by September. And that is the way you go and promote to
Right.
schools. You can't change your catalog every quarter because you
Absolutely.
sell for a full academic year, so you can't change prices in between at all. I mean, on some products which are over the counter, there is still a possibility, but then that is also very bleak. So no interim price increase. Our next price increase, if any, and if paper prices do remain at this level or go slightly higher, then we will relook at it around September for the next for the next academic year. But we don't do a quarter on quarter price increase. It's done once in a year. That's it.
Yeah, so actually that brings me to this thought that it really enforces, and obviously the entire industry would be practicing like that because everybody has to sell in the same manner,
So
as
you
you're
can't
just
change
saying.
the catalog price. You can't change the
Yeah,
catalog price.
yeah.
If you're
So
selling over-the-counter products, you can't.
absolutely. So that actually enforces the fact that economies of scale must be playing a big part in creating advantage for you, because when you have large economies of scale, you actually make very good deals in the raw material prices. So versus your local competitors, is it helping you in garnering market share, or is it putting you in a better place? Like, please give us some thoughts on that.
Two aspects to that. One, of course, is economies of scale in terms of production. The higher the print run, the lower the cost of production. So, again, depending upon the size of your print run on volumes that you're driving for an individual book, your prices go accordingly. And second, of course, you do have advantage of scale in paper procurement, because if you're a larger customer for the paper suppliers, of course, you would get more competitive prices.
And since post COVID, like as you were just highlighting, the demand had picked up. So post COVID, is there any change in the competitive intensity in the market? Are smaller publishers finding it difficult? Has there been a sort of any major shift, or there is higher competitive intensity? I'm just trying to see how's the market share movement looking like for organized players, and especially very like branded and very well-known publishers like you.
We have seen challenges in supply from both large and smaller publishers during the last year and a half. Uh, Planning has been a bit off for some of the publishers. Even some large publishers have not been able to supply in the market because of various reasons, whether it was their planning, whether it was their paper procurement that was delayed. We've been very proactive and managed to procure paper well in advance. And fortunately for this year, we've not had many shortages in supply to the market. So in terms of supply, we definitely have an advantage. Uh, and in terms of smaller publishers, of course, once the NCF comes in, there will be a challenge for them to turn around so quickly also.
Okay. Fair enough. Now let's go to the other part of the business model, which also looks exciting because you have been equally operating as a venture capital investor very efficiently. We have seen in the last 1 or 2 years. Help us understand the strategy here. One part we do understand that you're investing into synergistic platforms and you're exiting also when you feel at the right time. But we are also observing that you're building your own platforms, your YouTube platforms. There is Educate 360. There is also another platform. So how's this entire investment ecosystem you're visualizing, and how are you looking at it from the next 2 3 years with respect to the revenue growth or the entire ecosystem growth?
So thanks. I mean, in terms of our edtech investments, we have been fortunate also, and we've probably backed the right kind of people and been able to get exit. I mean, to be honest, getting an exit is more about availability of an exit rather than our pushing for an exit. We've been fortunate to get two in the last 1 year. And yes, we do invest into platforms and product where we really don't have expertise there, and where we can strategically help them either to grow the market share, or in some form or the other, we are able to strategically help them. I mean, we're not inactive investors in that. We are pretty active, and we do have some collaboration with all the companies that we've got into, whether it is selling their products on B2B basis, whether it's marketing their products to our customers, or whether on the back end side, helping them procure better. So that is the kind of investments that we do, and we continue to do. We have also announced that we are investing in another one in the next 2 weeks. We've announced last week. It's a small investment, so we'll continue to invest in these Series A or pre-Series A at companies valued less than probably 70, 80 crores, and then continue to take exits as and when we get them. So that's our investment strategy, and we'll only invest in education, whether it is ed tech or education. We are okay with that. Of course, we will not get into physical schools and stuff, but apart from that, anything on the education services side, anything on the technology side, we'll definitely have a look. Uh, on the other part, in terms of our own platforms, uh, we're not pushing too hard, to be honest, but because we have invested a lot of money in the last 10 odd years, we've seen as technology, I mean, we do not have that kind of capacity to burn money, which EdTech has been able to burn. But we are running two, three initiatives which are doing well for us. Of course, Milestone is one of them, which is a curriculum platform again, which is there in about 250 odd schools. Then the S-Chan, the Academy, the YouTube channel has done really well for us. Preliminary, it's largely a promotion platform for our products. And we are seeing very good traction in the last 12 months. We did not expect it to do that well, to be honest, but it's got into 11 million views and almost 1,20,000 subscribers over 1 year. So that is very encouraging, and that means people appreciate the kind of content and products that we are showcasing there. Going forward, yes, we will definitely look to monetize it either through courses or some other way. So that is something that we are looking at. In terms of the other app, we have a test coach app that we are looking to relaunch, which is in the test prep segment, where we will do mock tests, lectures, and courses. So that is slated for release around May, June. We are reworking on that, and technology had actually gone outdated from the previous app, so we have just upgraded that technology, and we should relaunch it in around June, July.
Okay. And any sort of major capex planned for that?
No, I mean, not really. I mean, these are investments in these are limited to a crore or 2 crores a year. I mean, and plus another crore or two for marketing. So we are not very investment heavy. We rather let them find their own way. See, education as a business is a long term sustainable kind of business, and when you try and push too hard, you tend to end up creating inefficiencies within the system. So we like. I mean, we've been around. The company's been around for 80, 85 years. I mean, we are in no hurry to showcase anything. We just continue to want to build a sustainable cash flow generating business and generate money for the shareholders and everybody else. So we will continue to do it steadily without pushing too hard.
Very nice. Last two questions. One again, a zero net debt. Is that looking a possibility sort of this year or early next year? And also, is that something which is a conscious strategy by the group to really maintain a zero net debt profile?
So we are on track. We are on track, and maybe within next 1 month or so we should hit that. Conscious strategy, yes, post COVID, definitely. I mean, we like to have cash in books. Not to say that we will not take debt. For of course the season, we will continue to build working capital debt, but we are not doing very large scale investments. We'd like to be a services organization, not to build something which is very capex heavy. We will invest into content over the next year and a half, but again, that is not very large. It's around 10 to 15 crores. So we'll continue to probably from the cash flows we get invest 20-25% internally. Then of course do some investments. Then dividends will come in. So that is the way we want to build it up, and slow and steady, so that we can sustain for a longer period of time. And plus, of course, with the kind of experience we've all had in COVID, we would like to build in that kind of safety within the system.
Absolutely. I think the investors and the viewers, I think, will love to hear that. Last question to you, and you refer to that. Now, actually, I'm summing up here. So, are we seeing that basically this year, or as we move to the next 4 or 5 quarters, driven by NCF and other opportunities, are we looking for a sort of strong double-digit growth? Is it like something between like high teens or even more than that? And also, are the margins looking sustainable at present? Or do you expect the margins to improve from here if the raw material prices are looking to moderate?
So I would say no challenge on the margins, to be honest. That is some guidance I can give, that over the next 4 or 5 quarters, I don't see a major challenge in margins, unless, of course, paper prices go to a different level. That is something that we've not looked at. But again, a lot of our, paper prices, once they increase, of course, everybody across the board has to increase prices. So we are on a stable wicket in terms of passing on the costs to the end consumer. In terms of guidance on revenue, I would say we would be better configured to give that at the end of our May results, once we have seen what we've closed at in March and how the NCF is playing out. Then we'll be able to give it. But yes, having said that, minimum 14-15% is definitely on the cards.
Okay, Saurabh, I think we'll leave at that. I think this looks like a sort of a strong momentum both on the market development and also on the way business is shaping up for you. Thanks a lot for coming on the show and patiently explaining our viewers about the business model and where Chand is progressing.
Thank you so much. Thank you.
And dear viewers, with that, it's a wrap on the show. Hope you enjoyed it.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.